Hey everyone, welcome back. Today, we're jumping right into another explainer, and this one is an absolutely crucial deep dive. We're taking what usually feels like a massive, high-stakes compliance headache and breaking it down into a precise, totally manageable roadmap. We're talking about the exact mechanics of UA corporate tax registration and the EmaraTax filing process. So, if you want to know exactly how to get an entity registered and successfully filed without breaking a sweat, you are in the perfect place. Let's get into it.
Okay, let's dive into this. Here's our roadmap for today. 1. Mandatory EmaraTax registration. 2. Registration deadlines and penalties. 3. The 6-step filing process. And 4. The ultimate time-saving tip.
Right, starting with Section 1, mandatory EmaraTax registration. Who needs to register and where? So pretty much all taxable entities have to register, right? We're talking resident companies, those juridical persons, and even non-resident entities that have a UAE nexus, meaning they've got that specific connection to the UAE triggering a tax obligation. But pay close attention to this specific threshold, 1 million dirhams. This isn't just a corporate game. If you are an individual conducting business, the second your turnover crosses that exact 1 million dirham line in the sand, you got to register, no exceptions. It's a hard cutoff for natural persons, so keeping a really close eye on that revenue is absolutely critical.
Now, you might be wondering how you actually do it. Well, listen closely, because there is absolutely zero paper-based alternative here. You literally cannot mail in a form. The exclusive portal, eservices.tax.gov.ae, is the one and only gateway. If you aren't logging in right there to generate your unique corporate tax registration number, you simply aren't getting registered. It's that simple.
Think of this next part like your pre-flight checklist. Seriously, before you even open your web browser, you need to have your materials gathered. You're going to need the entity's trade license, the Emirates ID and passport copies of your authorized signatories, the Memorandum of Association, the MOA, the document outlining your company structure, and precise details of your business activities. Gathering this exact checklist beforehand, it is going to save you a massive amount of frustration. Once you submit those and they get approved, boom, you finally get that corporate tax registration number. Moving on to Section 2, registration deadlines and penalties, the cost of missing the window.
So we know how to register, but knowing when is just as important. Historically, these deadlines were tied to your license issuance month, but actually, transitional timelines have been phased in differently across various taxpayer categories since 2023. So, you always need to check the current FTA timeline for your specific category. Why? We'll take a look at this number. 10,000 dirhams. That is the strict automatic penalty just for registering late. Missing your specific registration window triggers this instantly. It's an incredibly expensive, totally unforced error that will absolutely ruin your week. But the good news? It is entirely preventable just by knowing your deadline.
Okay, Section 3, the 6-step filing process, from preparation to payment.
All right, with registration done and your TRN officially in hand, we enter the core execution phase. And the absolute golden rule here is the 9-month filing window after your financial year end. And this brilliantly illustrates how it works. Let's say we have a standard entity wrapping up its year on December 31st, 2025. Your ultimate filing and payment deadline lands exactly 9 months later on September 30th, 2026. This really grounds that abstract 9-month rule into a tangible, easy-to-remember reality.
But wait, before we jump into the 6 steps themselves, we need to talk about the financial statements. Obviously, you need to finalize your financials, but some entities are legally required to have audited statements before they can even file. So who falls into that mandatory audit bucket? It's a two-pronged rule. First, any taxable person with revenue over 50 million dirhams. And second, all qualifying free zone persons, or QFZPs, meaning businesses in free zones meeting those specific conditions for tax relief. For QFZPs, the audit is mandatory regardless of what their revenue is. Keep that in mind.
So here is how this all builds into our comprehensive 6-step process. Step 1, you confirm that tax period and deadline. Step 2, finalize, and if required, like we just talked about, audit those financials. Step 3 is computation. That means adjusting your accounting profit for exempt income, non-deductible expenses, and reliefs. Step 4, populate the EmaraTax return with all your core schedules and disclosures. Step 5 is a thorough review, and I mean thorough. Why? Because once you file, making amendments requires a whole separate voluntary disclosure process. And trust me, that brings its own penalty exposure if you understated the tax due. Finally, Step 6, submit and settle the liability before that 9-month deadline. There is no later separate payment window, so you got to do both at the same time.
Let's hit Section 4, the ultimate time-saving tip.
The insider edge for tax professionals.
If you want some serious efficiency in your workflow, you need to follow this golden rule. Build your working papers so that every single FTTR return field maps directly to a labeled adjustment in your tax computation. Seriously, when you are rushing near a deadline, copying numbers from messy internal spreadsheets into the portal, it's practically begging for disastrous transposition errors. Using direct one-to-one mapping, it saves real time and it mitigates a massive amount of risk. It's a total game changer.
All right, we've covered a ton today. We went through the mechanics of registration, those incredibly strict deadlines, that nasty 10,000 dirham penalty trap, and the exact 6-step process to get your return filed and paid. But before we wrap up this explainer, I want to leave you with the provocative questions straight from the source material. Picture this. You've hit submit. The tax is paid. But ask yourself, your return is filed, but is your compliance file truly defensible? You see, filing is just the mechanics. Having a file that actually stands up to intense scrutiny, that is the true art of tax defense, and mastering that is the natural next step in your learning journey. Thanks so much for joining me on this explainer, and I'll catch you on the next one.